Good morning. I'm Vince Lancy. Today's Goldfix market rundown is mostly about silver. We had a nice report from ANZ Bank that we're reading through now, and they say the words, there are increasing risks of a short squeeze in silver. Not something we talk about here too much because it's the tool of coin salesmen, but uh, it's real. And there you go. All right, so let's read the markets first. 10-year yields are unchanged. The dollar is up 27 at 103.51. The S&P 500 is 56.25, up 10. The VIX is 21.66, unchanged offered. Gold is 30.38, up $4 on the highs of the evening. Silver 33.85 on the highs of the evening, so it's down 12. Copper 4.99, up almost a percentage point. WTI 66.92, up 4 cents. Natural gas 418, up 8. Bitcoin 83 spot 639, up about 1,000. Palladium 962, down 4. Platinum 991, down 11. Gold, silver dipped below 90. Soy, corn, wheat 998, 447, 566, down 3, down 1, down 2.5. All right. These are the posts we put out yesterday. The ones we would draw your attention to as a precious metals person would be the first three, actually the first two. The mining special one, that's the industry overview that we hinted at. And there's the second one, miners, BOA's latest report reveals massive shift. That's the morning rundown that we did. James Grant is the third post there. Now, he did an interview on CNBC. We have the YouTube version of that for you. He thinks that rate hikes now are as likely as rate cuts. Now, we love James Grant, and we read James Grant, and so do our founders when we assume they do anyway. And while we think he could be right, really could be right, like it's crazy, but if Powell's not looking at the deficit and the interest payments that he has to make, he probably should be considering raising rates, really. Unfortunately, there is going to be political pressure on him. And that political pressure is, hey, if you raise rates, our interest expense is going to go up even more. I'm not so sure if that's, well, I know it's not a mandate for Powell, but it might be an invisible mandate. Anyway, after that, Donald Trump's call with Vladimir Putin ends. If you're on the right, you're like, see, he's bringing peace, right? If you're on the left, it's like, yeah, but at what cost? So there you go. You know, take your sides, place your bets. Ripple as a strategic financial asset for the U.S. Increasingly being viewed as a backbone, and it's finally filtering into the normies, which I would consider myself as one, and a couple other things there you can see. All right, there's the front page. Again, here's why gold rallied last week. It's correct. Hate to say that Goldman's correct, but they are. All right, so discussion. We start off with today being Fed Day. QT or not QT, that is the question. As the Federal Reserve's two-day interest rate setting meeting concludes, the central bank is widely expected to keep interest rates unchanged. However, analysts believe that the Fed may slow or pause bond holdings under quantitative tightening. So he probably does not want to ease because of inflation. On the other hand, financial conditions are getting tight. So from his point of view, it's getting a little bit difficult. As you can see, stocks are proving that. But as long as bonds are stable, he's not going to do anything. He may do a little backing off of quantitative tightening, but that will be, when you hear that come out today, you know that's what that's about, right? He backs off of quantitative tightening, et cetera, et cetera. Next, the source of our title quote, taking inventory of silver demand and lack of supply. Awkward title. We just came up with that on the top of our heads. But ANZ, which we would not describe them as a player in bullion. No offense, guys. But that's because that's a compliment. They're clean. They're in Asia, right? They're English speaking. They can give us insights into Asian supply and demand. And at the same time, they can frankly talk about what the hell is going on in London and the US without violating their house problems because they don't have any house problems. So this report, ANZ is very good when they put out reports. We like to read their stuff about dry goods as well because they see the bulk dry goods market better than most. But anyway, this is about silver. They have a report they put out from time to time called The Vault, covering precious metals. But this report is just all about silver. All right, so report topics include, as you can see, I wrote there, LBMA shortage, right? They talk about it. Supply deficit, we as silver people know about it, but they talk about it. They give a realistic explanation. Above ground compensatory limitations, that's a mouthful. What it really means is that refiners and smelters and remelters and whatever you want to call them are just not going to do what you want them to do until the price is higher. So there is a built-in catalyst for the market to go higher. Demand inelasticity, I'm spelling challenged, referring to the fact that demand is elastic, but the industrial demand is not as elastic as people think. And as the industrial demand decreases, investor demand increases. So there is a bit of a problem there for the shorts. Tariff implications, front loading is the buying right now versus over the long run. What does it mean? Well, it's bullish over the long run and it's bullish in the short run. So the only thing that will save shorts in silver is like a global depression now. Anyway, we'll move on from that. It's all illustrated. They have some really good charts there as well. They talk technicals. I'm not that interested in technicals from a bank, but they throw those in there as well. And they have an iconic graphic called like their scorecard, and it's kind of a checklist, and it's actually pretty good. It's a risk meeting. So quoting from them, silver price is up 17% this year, which is, I didn't even know that. That's a lot. Aided by gold's unrelenting rally. The ratio of LBMA silver stocks to silver-backed ETF holdings has fallen to a historical low of 1 to 1. Furthermore, there are increasing risks of a short squeeze as swap dealer positions, that's bullion banks, that's the CFTC things we see, and it really focuses on LBMA, are net short at their highest since 2021. Next, silver holdings in London. These are excerpts. There's a lot in here, but these are the excerpts I think that would get our attention. Silver holdings in the London Bullion Market Association vaults have dropped by 128 million ounces to 722 million ounces since November, while COMEX inventories jumped 101 million ounces to 441 million ounces. This has seen a significant tightening of silver in the London market since November, which remains the global benchmark pricing for now, we would add. There's conversation about tariffs. You can see that there. Comment about the LBMA. We're going to have the full report today, okay? But I want to just throw an insight that hopefully will explain this. There's a game that's been played in precious metals forever, and the game is the only difference between gold now and the difference between gold 6 months from now is time, right? So because it's not destroyed, you get to lease it out and borrow it and then just repay it later on. You just keep kicking it down the yield curve when you're in a pinch. And they've done that with silver quite successfully for decades. Every so often, because silver isn't gold, right? This is something that Eric put a very fine point on. He said, it's not, in an interview that we did with him, he said, silver is not backstopped by central banks, which is a nice inversion of one of the reasons that silver doesn't rally. So silver doesn't rally because there's no central bank demand. That's right, right? But because there's no central bank demand, there's no central bank silver to lend out. And there's no silver to lend out, then you can't play the gold game with silver too much, too long. And that's what they've been doing. So if there's no silver to lend out, then they're dependent on scrap. They're dependent on, Joe and Mary who have to sell their coins to pay their credit card bills, and then they melt the coins down and they make them into 1,000 ounce Comex bars, yada yada yada, and so on and so on. All right, so I think that's an important point. The crowded trade in gold is even more crowded in silver, significantly more crowded in silver, with potential for big relief overnight. Boom, something happens, right? But the reality of it is they're playing the gold game in silver, and they keep talking about silver's an industrial metal, silver's an industrial metal. That's because they don't want it to be a precious metal, because if it's precious, then there's constant non-seasonal, non-industrial demand. They're playing the cycle game, the economic cycle game, with silver. When there's a recession, they can get their shorts back, right? When there's a rally in the industrial market, well, they can just kick it out on the yield curve. That's it. So the game in silver is it's not over. They've gotten out of worse before, meaning more acute. Anyway, so moving on to the next one of the other topics in there, tariffs, U.S. specific. Remember, they're in New Zealand, so they can be frank. The U.S. is a net importer of silver. Mexico and Canada account for more than 70% of total imports. This will, and here's a sentence that you won't hear anywhere else. This will make it difficult to find alternative sources, keeping physical premiums high in the U.S. The two charts that are there, they're small. You can blow them up when you look at it. U.S. silver import dependence is high on the left, and on the right is the London, New York thing. So silver is moving from London to New York. So the London silver that's moving to New York is probably not going to be checking out anytime soon. And we're going to offer a reason for that later on. A tight physical market continuing on is expected to persist for the fifth consecutive year, although the deficit is expected to narrow in 2025. So there's a little bit more silver supply coming online. And so in my twisted, ironic way, I'm a bullion bank. I'm like, oh, the deficit's easing. We're going to be okay. And these guys will think that's a sign to just keep doing what they're doing. And they're all backstopped by the government, all of them. And it's, that's how it works. When you're backstopped by the government, the put is over there. At worst, they'll be embarrassed. That's it. And the governments will bail them out. But it won't be before something bigger. We want to say that we have this report and we're looking at it now, and it'll be out to you today, hopefully by noon. It's very good. It's silver focused. The ironic thing, a little footnote, an ironic footnote, they raised their price target on gold. We're not even mentioning that here. They raised their price target on gold by $100, but not their price target on silver, which should give you an eye raise. But their point is silver is begrudgingly following gold. And if gold's going to go up and silver is going to be an all at once moment, right? Okay. So markets yesterday, the actual broader market stocks ended sharply down as investors remained cautious ahead of the Federal Reserve's monetary policy decision. Treasury yields fell on strong demand for 20-year bond auction. The dollar weakened further while gold hit a new record high. We're not even talking about gold. It's on an all-time high. Oil prices eased as Ukraine peace talks offset Mideast instability worries. Comment about gold, new all-time high. 3,000 is support now. I'm not ignoring it. I'll take the pom-poms out later. But there are signs in the gold market now that 3,300 by the end of July is not a problem. 3,500 by the end of December is not a problem. And we personally think 3,600 is going to be a very active level if it gets there. And we think it's going to get there. Anyway, that's neither here nor there. $100 lower and everyone will be crying. All right. We want to touch on something else. Believe it or not, that's gold oriented. Fintechs and crypto companies seek bank charters for growth. Financial technology firms and crypto companies are seeking to become state or national banks, FDIC banks, in a bid to expand their business under the Trump administration that they view as more industry friendly, according to more than half a dozen industry executives. Discussions and preparations for bank charters have increased significantly. Why? Well, because there's going to be new product. If you see a state like Utah saying, we're going to have gold debit cards, we're going to monetize gold for payment, and you're like, well, that's silly, right? Okay, I like the idea of saving my gold but not spending it. You're like, okay, so it's a gold MasterCard. And then you see the Genius Act passing on the other side. Then you see a confluence. You see a connection because an FDIC bank will be permitted to issue stable coins. And those stable coins can have any your grandmother's Hummels, your your empty asthma inhaler, gold, silver. You're going to see gold and silver stablecoins. You already see them out there in things like Kinesis and Pax Gold, but they're going to be FDIC approved in the US. That's how they protect the investor and probably enrich the bank. But the states are already acting. So the states are acting, right? The Stablecoin Act is there. There's an overlap. There's a Venn diagram. And that's just going to be a reason to retire more gold and silver from the marketplace. They're actually probably going to see them push back on silver being retired. There's some more news there. Geopolitics, we'll cover that some other time. Geez, it's 8:37. Data on deck, Fed decision today, and there's the news. Talking about the gold market, I mean, what can you say? Peace is breaking out in Europe, potentially, right? The Middle East, stable, kind of ceasefire-ish, and gold has gone up for 2 months. What's up with that? I think is what we used to say. Well, I'll tell you what's up with that. Gold is tied to the end of the war as being related somehow to money. So, technically speaking, 3,500, right? It's a nice round number. But no, the reality of it is, the next kick in the market rally will probably come from U.S. investment, and that U.S. investment will be on the back of a bank like Goldman Sachs raising their target again. So if you want to beware of that happening, you say, okay, that might be a good place to sell. You might be right. But between now and then, you've got to trade trend lines and you've got to trade Wix and whatever system you use. I'm Vince. Have a great day.